Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The electric vehicle market continues to grow, particularly in the US, but a lot of the EV companies are starting to face a lot of financial pressure as the price of electric vehicles is coming down. It's unknown how much demand is really going to grow over the next few years. And I think that's going to ultimately put a lot of pressure on electric vehicle charging companies. ChargePoint is one that I'm keeping an eye on. I think there's a lot of concerning trends, even some news that recently came out about some debt the company's taken out. So that's what I want to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube for all my content. And I want to start with the new credit facility that ChargePoint has. This was announced late last week. ChargePoint is getting a $150 million credit facility from a number of different banks. This is despite having a pretty good balance sheet. But let's go into exactly what that balance sheet looks like and why this cash might actually be needed. Here's the balance sheet as of April 30th, 2023, after first quarter results. You can see that cash, $283 million. And then on the liability side, there's about $300 million in debt already outstanding. So if this credit facility is drawn upon, that will actually increase that. Why is that so concerning? Well, it comes down to this chart right here. This is ChargePoint's revenues, operating expenses, and free cash flow over the last 12 months. The green bar is the company's revenue. You can see that the purple line, operating expenses, is actually exceeding revenue. So there's no chance for the company to make a profit. This isn't even including gross costs. Just simply operating expenses are higher than revenue. And it seems that the trends are basically following each other. So the company is obviously burning cash as a result. In the last 12 months, $322 million in negative free cash flow. So that means that the cash that was on the balance sheet is only going to last the company for about a year. That's why you need an additional $150 million to just keep things going. The problem is, if this facility is fully drawn, then ChargePoint is going to have $450 million worth of debt and a business that is not generating free cash flow. This is the core problem in the charging market. This has not been a profitable business, and it doesn't seem like that's going to be the case anytime soon. Yes, the number of electric vehicles is growing. Yes, the number of chargers out there is growing, and the usage of those chargers is growing, but we have not seen any of these companies be able to report a profit. When you install a charger in the field, then you have to actually have it used in generating return on investment. That just simply hasn't happened. I think the fundamental problem is that we have a commodity being delivered, electricity, through now what is going to be a commodity plug, the NACS standard, which most of these chargers are going to move to. There's no differentiation from one charging network over another. That means that nobody has any pricing power. So if you're not able to make money right now, how are you going to make money in the future? This is ChargePoint's core problem. And now we have potentially $450 million worth of debt. The trends are simply not good for a company like ChargePoint. I don't know how much longer this can go on, but I could see the company selling cash to raise more money that dilutes shareholders, would keep things afloat for a while, but it's just not sustainable until the company gets to positive free cash flow. And I don't see that anytime in the future. So this is one of those companies that the story sounds great. It sounds great that there's more EVs, we need more charging, but at the end of the day, you have to make money as a business. ChargePoint is not able to do that. And until it does, it's a stock I'm going to stay away from. What do you think about ChargePoint today? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.